That's it. We're starting already. We're live.
It looks live to me. Yes.
Wasn't there one more screen before, like an arrow shooting? That's
airtight ship we run here.
As always, right?
That arrow shooting comes in
at the end.
Something like that. At the end, that's what it comes in. At the end.
I think we were robbed of the arrow.
You guys should know that arrow shooting means that our show is headed up. It's an upward trajectory from the disaster that we usually make it.
At the beginning.
Can't go anywhere but up. Yeah. I'm good, but I mean, espresso is the need for the day. That stuff's been nuts the last couple of days. We have a responsibility to talk about things that seem insensitive, given what's going on. So it's exhausting.
Well, this is interesting that you and I have been trading for 35, 36 years, and we've been in media for 20 years. And there's often been times. Like I remember when 9/11 happened, it was a big deal to me to contact my customers to make sure that they were hedged, that they weren't going to lose everything just based on terror attacks. And it's this fine line, and I don't even think it's that fine a line if I explain it, is that this is not ghoulish profiteering from global disaster. This is our job. We did not create this situation. We trade to make money. We trade to hedge risk, and oftentimes hedging risk in a situation like this is paramount. So I hope that nobody interpreted it as ghoulish people saying, "Oh, awful things are going on in the world, and these guys are trying to become profiteers from it," because it's not really the case. It's what we do. It's our job. That's a good way to explain it.
Yeah, it's difficult to justify. I remember you and I were both on the trading floor when 9/11 happened, and I remember looking up at that big screen in the corner and having somebody Peter Rory, turn to me and say, "That was another plane." And I closed our desk. I immediately sent everyone with kids home.
Right.
And I closed our desk to make sure every position was where it should be before we actually went home. Now, it's not some sort of hero statement. It's our job. So enough to talk about these things, but that's what we need to do.
No. And when things like this happen, and of course, we're talking about what happened over the weekend and just the unbelievable situation in Israel and the Middle East. But it has lots of market moving implications. And if we were traders before it happened, we were traders after it happened. And oftentimes people have positions on, and they're curious about how these things react. So obvious on the surface, obviously crude shoots higher. The knee jerk of something like this is usually to buy bonds. And I know I saw the list of the things that you want to go over, but I would like to get into the long end at some point in time too, if we have time for that, because people usually buy the dollar, they buy gold, they buy US bonds in times of global distress. They did buy gold and they did buy bonds. They didn't buy the dollar. That was probably because the dollar had been up 12 straight weeks in a row, and the long positioning on it was unbelievable. Do you have anything to add to that intro before we bring
and this is the last thing I'll say before we bring Mike in. Is, I was talking to somebody this morning, a banker, another guy that works at a pretty large bank, has worked at the Fed. And he was talking to me about the flight to safety. And I'm like, I don't think this was. Because, gold rallied, but it rallied less than 3%. Treasuries didn't even get their September move back. And equities didn't fall.
Do you know why I think Treasuries rallied just a hair, but not more? Because I believe that the market is now sophisticated enough to realize that as the weeks wear on, there's going to be a huge aid package, defense package announced here, to the tune, let's throw out a number, 50 billion. And the market was already concerned about tremendous amount of government issuance to raise money for these spending projects. And that could actually push the prices of bonds down in the long, short, and medium term. I mean, the longer short is what I meant. If you speak Jim today, I got to get the caffeine going.
No, I do, and I understand what you're saying. I like it, and I've got a similar, although not the same, reasoning for what's happening with oil. So let's get to it.
Okay, good. So let's bring in our guest, who is the chief analyst, trading strategist for Path Trading Partners. Is that the right way to describe Mike Arnold? Our good friend,
chief technical officer and chief technical strategist
of Path Trading Partners. He is one of the best technical analysts we know, and we're so glad to have him on our team. Mike, welcome.
Was that
That's
the
the
arrow?
arrow. That's the arrow we were talking about. See, we are not old and crazy. That was the arrow. I thought that was before. Hey, we're right on board now. Michael, how are you, my friend?
Great. How are both of you doing?
Excellent, excellent. By the way, I will like to add a little disclaimer at the beginning. My licensing are based on futures, but I love looking at charts just about more than anything. I make no recommendations on any of these securities that are not futures, but I love to have these guys discuss the charts, and hopefully we'll ask some fundamental questions about these charts. Bobby, what do you want to get to first?
Well, Mike put together a nice little list, so let's just start at the top of it and start with PPA, which is the Invesco Aerospace and Defense ETF. You want to talk about that, Mike? Maybe put it up.
Sure. We can go to my charts and take a look at where this sits. Because everything I do is pretty much chart based. We've talked before. It's about 95% technical analysis and charts and 5% fundamentals and everything else. So I really
it just dawned on me right now, Mike, that this is the first time you've been on this podcast with us. You've been on other podcasts so often that I'm sorry that I should have given you a better intro, and thanks for self-introing you. He's a technical analyst. Technical analysts are good ones like Mike. Don't care about why. It's just what the price does. Please take it from there.
And the why on this one's pretty straightforward. So,
well, yeah, of course, right?
I mean, there's not a lot of debate. Well, why is aerospace and defense rocketing up the last few days? Well, as you talked about it in the intro, with the situation going on in the Middle East. So a lot of people will naturally run into some of these things, but there's certain things on the list that I've been reviewing that are in much better positions than other ones. So when I see, again, you talked about whether you're hedging stuff, whether you're looking for opportunities, whatever the goal may be for looking at some of these stocks, I'm looking for things that have better upside potential to be long, or the things that aren't reacting as well could turn into shorts at some point. But PPA is very fascinating because if we just take a look at the longer term weekly view, it was at a major support area down here between about 77.50 and 78.50. We had the events go off over the weekend and it's rocketed up. Now, what is very interesting is a back above 82.25, which was a very strong prior resistance area from February, from April of 23, became support in June, became support in August, and then was broken in a sell-off in September, but now it's back up above that very key support level. Another thing which people on this stream won't be familiar with me talking about is harmonics. I use 12.5% intervals to work off key levels, and the 62.5 is a very key harmonic level. So we
can I add something to that real quick, Mike?
Yeah, go ahead.
Most of you guys would look at that sort of function on a chart as the Fibonacci's, and this is different than the Fibonacci's, and all his harmonic levels are 12.5%. So it's tested out in his models better. I just want to make sure people are following you. Sorry about that.
No, very good. So again, some of the levels are going to line up like a 50% level fib and harmonics, but instead of using the 61.8, I use the 62.5. Instead of using the 38.3, I use the 37.5.
For anyone
why do you use those?
Yeah, I was just going to answer that question for him, Jim. For anyone who asks why Mike uses it, his answer will always be the same. It tested out better, period.
And I'm all based off probabilities, because when I can assign probabilities to things, I can figure out proper reward to risk. I can figure out probabilities of things going to specific targets. This gives me specific targets. One thing I talk about is when we get a close, and this would be a daily close, it'll even be stronger if it gets a weekly close above the 82.85 level. The next two targets, intermediate target would be 83.92, and a major target would be 84.99. And you see the 84.99 level is also where the major resistance would be. So the probabilities have now shifted, especially potentially with today's close, that we should see some higher price action in this ETF. That does not preclude a pullback. Now, if we start getting back below 80, 70, then it's probably over. Then, it was a strong move. Something's changed with the situation going on. People's, I don't know what it would be. That would all be speculation on my part, but that would be my key line in the sand on a pullback. Not only would it be going below another key harmonic level on a retracement, it would have actually dropped back below its 200 simple moving average. And another concept I use, the rotation zone, and all that's clustering in the same area just above this 80, 70 to 81 area. It would also broke and you also use the 50 EMA. It would also have dropped back below the 50 EMA and the 50% harmonic before that. So it would have lost all key support levels, which then I would not want to be long this anymore at all. So I have potential targets the upside, and I have an area that if we break, I don't want to touch it anymore.
Can you put a fine point on that? Because most people would look at that and said the market has gone up above major resistance and now it's staying above there. And you're saying it can even pull back through that resistance and not nullify the fact that it broke through it on the upside, correct? And
Correct.
What's the line in the sand again?
My major line in the sand is 80, 70, but if it starts dropping, I'll give it even something closer. If you start getting below 81.75, that would not be good in the short term. That would be if somebody wanted to use a tighter level, that's the level I would be looking at, because that was a prior little support base that was broken on the 21st of September, and now we're back above there. And we've got the hooking up 50 and the 50% harmonic from the highs in July back to the sell-off lows on the 6th of October before launching up. So we have a lot of key support. Even if it pulls back, we have a lot of key support in here that should not get broken.
I want to point out something before I ask Mike a couple of questions. The reason we're doing this show is Jim and I talked about it. I got a couple of people texting me over the weekend. Should we buy defense stock? Should I buy crude oil? All this kind of stuff. And I thought, Jim and I decided this might be a good thing to cover as to what may move, what may not move. And because none of us are in military intelligence in any of the countries, we have to rely on the price action. We don't have any information on how these things are going to move. And my question, Mike, is that 81.79 level. Could you theoretically say, even though I know you don't normally say this, that if it kind of gets below there, you shift to more of a neutral bias, or is that not the right way to say it?
Yeah, that could be a very good way to say it. Below 81.78 on a closing basis. I would not look at that intraday. That would be on a daily closing basis. That would shift me from bullish to more slightly bullish in the neutral camp. We start losing the 81.23. I'd be in complete neutral, and then we lose this 80.70 level. I'd turn back into bearish.
All right. So my next question is, when I look at aerospace and defense, I look at XAR. Is that much different to you?
Yes. XAR, which is the aerospace and defense spider, is different. This is not one that this would not be my first choice. It has a lot more proving to do. It's rallied back. It's come off a key support area. It's come off its 200 weekly. And even if I put a line in there, you'll see the key support area. If I can get my line, there we go. So it's bounced. It put in a nice bottoming candle, and now it's moved up. But it's not above the 62.5 level. So I'd be watching for a close above 119.01, at least on a daily, preferably a weekly. And it's stalling out. This is the weekly chart right now, but you can see back in April and May of this year, we had a major resistance shelf where it topped out, broke through it. The resistance became support in June. Then we broke through it, and now we have yet to break back above it. So I would be watching, at least in the short term, to be able to get above 117.35, and at least it's holding the daily. I'm now on a daily chart, the daily 200. But in order to really shift the probabilities, we have to get above 119.01 on a closing basis, or this doesn't really shift to bullish mode. Why? Because in the short term, between the 50% and the 62% harmonic, we could see a rollover play and more of a backfill. So this, if I had to choose between PPA and XAR, I'd be going on, let's say they both pull back over the next few days. I'd still be looking at PPA first before I'd shift to XAR. XAR has a little more work to do before it gets into the stronger bullish camp.
Now, some people might ask, looking at this kind of scenario, Mike, if, okay, XAR hasn't rallied and the natural tendency of people is to say, well, then I'll get in that one because there's more room to the upside. What would you say to that?
I like things that have proven themselves out. The strong generally get stronger. Now, XAR could do some catch up, but I'm going to defer on the stuff that's already shifted the probabilities to higher potential price action other than stuff that's stalled out. Now, if in a couple days XAR closes above 119.01, then the probabilities would shift. They have not happened yet. So I'm going to default to the things where the probabilities have shifted.
One quick question, Mike. Do you ever look at those two charts and think to yourself that a spread opportunity may have arisen and that you grab the first one with the more bullish chart and be short the next one? No is a fine answer. I just,
drill down more into both the structures of these ETFs because you could play some catch up depending on how these are both structured with their core holdings and which ones have higher certain holdings compared to the other ones of certain stocks. So sense. I would naturally want to go short one of these at this point. I don't think it would serve proper reward to risk. I'd rather, now this could also be from your short question. Let's say stuff starts working out better in the Middle East and defense stocks roll over again. Well, I might look on short opportunities on XAR first rather than PPA. So that's the way I would look at it, since we don't know exactly what's going to happen. But none of us are military strategists or military experts. At least because then
Bobby and I act like we're experts on just about everything. So I wouldn't put it past us. By the time we could hear one podcast and act like we were, part of the CIA. But anyway, yeah. Right?
Hey, Jimmy, when you ask that question, does it pop into your mind to sell calls, sell puts, buy calls, buy puts? Again, you're not making a recommendation, of course, but
no, not at all.
But you'd be talking about options.
Right. I always try to represent my positions and options if the asset has a good liquid options market. Like the first one, when he said, I immediately thought of a butterfly that goes to that high. You know what I mean? Like a call fly that has that. That's back to the first one you showed, right?
Yeah.
Yeah. So to me, from a technical basis, I like that chart a lot. If you get a good close, I would consider putting in a call fly with that high. That's that high as the middle. That's just the way I look at things. Again, I don't even see I can't even read what the symbol is again. It's not about stocks. That's just the way I like to trade.
And that, again, is not a recommendation. What about something more basic like General Dynamics?
Hey, Bob, can we jump to defend real quick?
Yeah, let's do that.
I just wanted, because a lot of people like this is another, this is a aerospace and defense bull 3x share. All right. And I personally don't like to play these. But a lot of people love, I want the leverage. We don't have to spend a lot of time on this one, and then we'll get to some more specific stocks, because that's where I really like to focus.
I don't like this chart right off the bat.
But look at this. A lot of people, I want the 3x bull. I want this. I want the leverage. If you're looking at it from a weekly chart, it still hasn't regained a key breakdown area. We have major overhead resistance, a declining rotation zone, which is also overhead resistance. So this is, if somebody said, well, should I just be jumping in these 3x shares? No, I wouldn't be. I'm not here to tell you what to do, but this, from the last three charts we looked at, even though it sounds the sexiest, 3-time bull shares, it's the worst chart of the bunch. So that would be the lowest on my list.
I will remind people too, when you use leverage ETFs, Bobby, correct me if I'm wrong, there must be optionality within the structure. They have to use options to achieve that, which means it has a decay/theta factor that a lot of people don't think about, and it may be losing value while you sleep in order for them to represent a 3 times leverage, if that makes any sense to people.
Yeah, and that's why, even if we stall out here and PPA or XAR just goes sideways to choppy for a little bit, DFEN could roll over because of that decay.
That's the time value of money people don't seem to worry about in these leveraged ETFs. It is something you have to think about.
Yep.
All right, sorry to interrupt there, Bob.
No, you're good.
Get back to.
Oh, look at that one.
Now this, again, see, I'm a chart nerd because I'll call this a sexy chart.
This is a sexy chart. There's no question.
All right, this is General Dynamics, and let's just look at the weekly. It made lows back in May, stalled out right in front of that 50% harmonic, built a nice little base, nice little channeling base, and then broke above it, broke above the 50% harmonic. And now it looks like we're going to, unless this starts pulling back over the next 2 days, we could close above this 236.42 area on the weekly basis, and that would shift the probabilities higher for General Dynamics. So this is one, even, and you can see here on the daily chart, here's that 62.5 level. We closed above it on Monday, pulled back a bit Tuesday, still holding it Wednesday. Now, let's say this. We've still on a daily basis shifted the probabilities. I'd like to see it also on a weekly basis. However, on any backfill, you can see any backfill even towards about 228 to 229. We are coming into prior major resistance becoming support with a rising rotation zone. And while I haven't really gotten into what the rotation zone is, it's the 8 EMA orange line and the blue EMA 20. It's the 21 EMA blue line. I watch for pullbacks into those areas and then a rotation back up to confirm trend could be really getting some solid footing. So let's say we stall out or we start to backfill a bit. As long as we really don't close below 227.50 or 227.50, I'm not worried about this chart at all, and I'd be looking for key areas that it would find support and then a resumption of the bull trend. But the nice thing is this has already started to build a base long before the events of this weekend. So it's now, because I like things that, it sold off, it recovered a bit, and then it took a while. It took a number of weeks to really say, hey, I can't go lower. And now it's had a catalyst to take it higher. So there's a lot of support just under this market.
What about the target? Those old highs, right?
The targets, the first target, again, 243, then 250. And 250, if we close above this 236 area on the weekly, the 250 harmonic, that's 87.5 harmonic, becomes a major target area. And you can see that, and I love that target again, because that's where it stalled out in March of 22, stalled out in April of 22, didn't quite make it in August of 22, but then we had a multi-week top formation back between November and this January up in here. So that's a wonderful key target area again.
Cool. Lockheed
Martin. Now,
hey, Jimmy, while Mike is setting this up, go on Twitter and see what I just tweeted and retweet it, would you?
You betcha.
Go ahead, Mike.
Where I liked General Dynamics, Lockheed Martin, if we just look at the longer term, it's not even back above.
Yeah.
It's not even back above key support yet. So this, if I had to choose between a General Dynamics and a Lockheed Martin, I'd be choosing General Dynamics. Let's say they both pull back. I'd be looking at General Dynamics first, way before Lockheed Martin. Lockheed Martin still has a lot of heavy lifting to do. And until this could really get back above about 451, I'm not getting that interested in it. It's got to really prove itself. And even now, this is where I'll look at multiple time frames. That was based off the weekly. If I jump down to daily, I'm going to even go a little higher. It's got to get above 458 on a closing basis. Why? Because we could get above this, get between the 50 and the 62% harmonic, and hit this 200 simple moving average and roll over again.
Yeah, it's interesting. Lockheed fundamentally is one of those where I mean, you go and read about us and they do everything, right? But they're known as an aircraft kind of specialty manufacturer. And if this particular conflict that sparked us to do this show were to accelerate into something wider geopolitically, Lockheed Martin could be something in 2024 that could really take off. But this chart is not great, in my view, at all.
Agreed.
So that's why it's, again, helpful to go through things, whether it be on the ETF or just the individual stock side, to really help fine tune what our focus should be from the bullish side, instead of just saying, I'm going to just buy these companies because they're in this sector.
And that's the thing. That's, again, why, you know, a buddy texted me and said, should we buy in defense stocks? And another one said, I can't wait till we look at crude oil, because I got a whole story about that. But you don't just go out and blindly say, oh, I got to buy, you know, Lockheed because of this, or I got to buy RTX is another one. I got to buy RTX because it's in that sector. It's like, no, it may not be moving for a reason that you don't know.
Now, you brought up RTX.
I did.
And this is the weekly chart RTX. And yeah, we could get a bounce.
Can we talk about what RTX is real quick?
Go ahead.
What is it?
RTX. Go ahead, Mike.
You go ahead, Bob.
RTX is another defense stock. They have a pretty big specialty in cyber as well. So they're not one of the largest, but they they deal in defense, computer, and defense hacking more than anything.
Interesting. Huh. Okay, cool.
But if you look at this chart, I mean, hey, we've bounced a bit, but compare what our bounces are in Lockheed Martin and General Dynamics to this. This thing, it hasn't even approached the major resistance level. So it could rally up, but this, I mean, beyond anything like a short-term play, that there's not even a short-term play in this yet for me, but anything other than that would be, could possibly be setting up for another rollover play. It has not formed a strong foundation and bottoming pattern yet. And you see, even on the daily, it could easily roll over, fill the gap left behind between Friday the 6th and Monday the 9th, and sit and try to build a solid foundation down here. And then I may be interested in the future. But right now, I wouldn't be jumping into it.
By the way, you also should know RTX, formerly known as Raytheon.
Oh,
the easier way to look at
that's
it.
what I thought. Yes,
Yeah,
okay, I know they are.
They're RTX Corporation now, and they built the stealth bomber.
When did they change their name? Where have I been?
Gosh, about 3-4 years ago. But
okay,
they also built the stealth bomber, which got lost recently. So that's that big drop you see on the chart there, is when the stealth bomber, when that pilot ejected and the stealth bomber was just lost.
Oh, I remember the story.
Yeah, and then what was that, South Carolina or North Carolina?
Yeah, I think it was North Carolina.
Yeah,
right. Obviously, that was a big deal because it would conceivably have been some sort of computer glitches and failures, right?
Yeah.
Yeah. Okay. Moving along.
Northrop Grumman.
Okay.
That has, again, this is something I'm starting to get interested in, but you see, here's the weekly chart. It built a halfway decent base here, and it's moved up above 458, first level of key resistance, but it's got some really strong resistance about this 475 level. I want to see a weekly close above that 475 level and then that level to hold on any pullbacks. And then I'd start getting more interested in Northrop Grumman. Right now, because easily if this stalls out at 475 and can't get a key close above there, we could easily see a pullback to 458. Now, and if that 458 holds and it can really stay above the 200 simple moving average, which is right below that, and it can start forming whether it be a shorter term buying pattern or at least a sideways base again, I might get more interested in it. But this would be ahead of RTX for me, but not ahead of like GD, General Dynamics.
Can we jump, kind of go off the script a little bit, Mike, because we got a question, and I think I understand the question. It's from Mustafa Jutt. He's looking for an entry. It looks to me like it's on the Euro USD. Now, he didn't type it in a symbol that I would recognize. I think he mistyped it both times, but the second time he typed in ERU USD. So I assume he means EUR USD. And also when he says an entry, I don't know if he means long or short. So maybe you can just do a quick 5-second analysis of what you think of the euro currency.
Well, I'm still watching for a more of and I'm going to start a little differently. In the dollar, we went on, what was that, 12-week
tear.
And so I'm watching for even if we bounce in the dollar, which I would not be surprised to see a minor bounce over the next couple of days, I'm watching for another rollover play, which means I'm also looking for the euro to head higher even after a pullback. Now, if you're just looking at, let me just give a couple key levels here, because as long as the euro does not get a daily close back below 105.18, I'll be looking for a pullback and then another rotation higher. So that's what I'm keeping an eye on there. Now, the next key target area that I will be looking for, should we not get that close below that 62.5 level, would be roughly, it's going into some very severe resistance between roughly about 106.80 to 107.10. So that's where I'd be setting. And this is a short-term counter trend bounce, and then I'd be looking for another rollover play. This has not formed a long-term bottoming pattern yet. So just keep that in mind. It just was the dollar's not formed a long-term topping pattern yet, which I'll be watching for depending on the next major rally in it. So this would be a bounce play only from my perspective, not I'm going to sit and watch the euro go back to, above 110 anytime soon.
So here's what I like about both the euro and the British pound. Over on Sunday night and Monday, they rallied. The weird part about that is that, normally in times of, explosion of geopolitical risk, people flock to the US dollar. They didn't. They sold the dollar. And I think it could be they didn't really sell the dollar, but they certainly didn't buy it. Both the euro and the pound rallied a bit. To me, it was indicative of two things. One, everybody is short to shit out of those two things. They have been for the last 12 straight weeks. So market position favors what could be, in my opinion, a violent bounce. And two, the second part is that if we believe, which I think we do, that the U.S. government is going to start increasing deficits, increasing debt in order to now be fighting proxy wars in two different places, they could do some damage to the dollar. So I'm going to be looking by the way, I won't get into it until Mike tells me it's time to get into it, but I'm looking for a bigger bounce than it seems like Mike is. Bobby, does that make sense to you?
Yeah, it makes a lot of sense. And for anyone who wants to hear a pretty good thesis on the dollar itself, this coming Monday, we'll release the Futures Edge podcast, which is pre-recorded with Brent Johnson from Santiago Capital, who has a really good, did I say Santiago?
You did. Yeah, you're just getting so fancy.
I sound like Anchorman.
Santiago.
Santiago. No, he has a really good thesis on the dollar, why the dollar can fluctuate, but is likely to go higher either way.
But he
No, I
was
think in the
so
short
bright,
term,
wasn't he?
what's
Yeah.
that?
He was so smart, man. It was
Yeah,
amazing.
he was really smart. But yeah, I agree with you, Jim. I think if this accelerates, and a lot of what we're talking about here, right? Mike's talking about moves that need to happen before anything becomes available for him, theoretically. A lot of these things are not necessarily dependent upon, but will be affected quite a bit by what happens with this conflict between Israel and whoever, and where they go from that. So
now, real quick, in case it does, and in case it does accelerate, the next target above that 107 area, 107.10, the next major target would be 107.60, which is very, very strong resistance. And I look for at least a pause / pullback from that level if it does accelerate above 107.
there's a backup question here, a follow-up. And Mike, maybe I just want you to take the whole thing because it's not the kind of question we would answer, Mustafa. The question is, thank you so much, sir. Now is market going up or down? And I mean, our answer is generally either, but go ahead, Mike.
Now, could you rephrase that question?
He wants to know if the stock market's going up or
He
down.
wants to know if the euro is going up or down. I assume it's still the euro.
Oh, you think? I thought when he said the market, I just went for yeah, but I guess
Yeah.
I don't know. Yeah.
I mean, the euro in the short term, I'm still looking for some continued higher price action. Now, if you're talking about the broad market, we've gone to a couple very key areas. In the next couple days, I'm looking for more of a continued pullback and then another push higher in the overall broad stock market.
I would also say before we move on to Schlumberger that if you want more information from Mike, subscribe to the Path YouTube, the Path Trading Partners YouTube channel, where Mike directly engages. There won't be any better way to speak directly to him about markets if you need to. Go ahead, Mike. Let's just go to Schlumberger.
Schlumberger is also came down to a critical support. Actually, as like everything else, gapped up, but it still hasn't gotten above a key resistance level. You can really see that here on the weekly. It's key. It's a couple key areas. It's starting to look stronger, but it's got some heavy lifting to get through. Personally, I would really need it to get a close above about 59.40 before I get more interested in the probability shift. If that starts happening, I'll take a closer look at it. But if it can't get through some of this major resistance area and it stalls out, then it needs to build a stronger bullish pattern before I look to jump in on that one.
Let's move to Halliburton, and then after that, let's jump down to crude oil because I want to talk about that a little bit.
All right, Halliburton also off.
I don't hate Halliburton.
No, Halliburton. It's now in a multi-top area, topped out in April of 22, in June of 22, in January of 23, and as recently as September. But this keeps chipping away at this major resistance level. And you see it came up there in September. This is, again, the weekly chart. We pulled back into that rotation zone. We've rotated up. And if we close this week strong, especially above 41.17, I'm watching.
Is 41.17 that line? Like
41.17 is right here.
Okay.
I'll put a line right around there. That's just slightly higher than 41.17, but you see the black line I just put on is the area. If we hold above there, and we look at that on the daily, we also have a very strong descending trend line here, but we start getting above this area, we should easily, the probabilities would shift back to 42.50, which would make this how many times tops, and these tops are getting closer together. That's one thing. So when we get a top this close together, it could form into a double top pattern, but I'd be watching for a breakout. But what would be interesting is if it does get into this double top area as long as you don't get a weekly close below the low of 37.86, this could be it doesn't have to break out right away, but this could be a very strong play at some point in the future because it's a multi-top pattern that is just slowly building a base. You can see this base that's been built right below it. And we've already, again, chipped away at this level multiple times.
And when it goes, it tends to go fast. If it's built a proper base, and the move could be explosive when it goes through it, correct?
Yeah, and what I love is if we push just a little higher, technically if we push above 41.83, we're in potential double top territory. So that gives me a key stop level because then if we close below that 37.86, I don't want to touch it. It means the top failed again, and it also triggered a significant reversal pattern. So I'd then be looking for a much bigger pullback and reassessing. So not only could I be watching for breakouts, I also have a failure pattern because we know every trade can't work out. All trades don't work out, but I now have a definitive probability line in the sand.
Love it.
What do you want to go to next?
Yeah, I want to do crude oil. I want to look at crude oil because as you're putting that chart up, I want to talk about why crude oil didn't spike. And I just want to go through this real quick. Jimmy, I don't know if I have a chance to tell you this, but I was thinking about this a lot. And the same person who asked me, should we be buying defense stocks? Actually, it was a different person, but said, should we be buying crude oil based on Middle East unrest, for lack of a better word? And there is no oil producing nation directly involved in what's going on right now. There was one early on who was implied to be involved, and that was obviously Iran. I mean, it's not a surprise to anybody. And if you look at Iran's production, 2020 they were below 2 million barrels a day, and right now they're above 3. They're just above 3, like 3.009, somewhere in that range, and it continues to grow. They actually, and the type of crude they produce is light and medium crude, all falls in the sour category, which is best for diesel, fuel oil, things like that. So going into winter, those are important fuels. And we spiked, but we didn't really spike as if Iran were a confirmed participant, number one. I think a lot of people would tell you that they definitely back Hamas. That's kind of a global fact, right? That they're a financier of Hamas. But whether they approve this operation, whether they were involved in it, that's all still globally a question. I'm not saying they are or aren't. And because of that, and because of the level of the SPR, I don't see immediate sanctions happening on Iranian oil at all. I don't see any sort of okaying of an attack on Iran. This is my opinion. I have no inside information, because it would really hurt the U.S. economy and where crude oil is about 11 months before an election, 12 months before an election. And with the SPR where it is, I suspect that we'll hear announcements soon that Iran may have been involved, but it was indirect. They didn't know about this, blah, blah, blah. And the reason is the price of crude oil. And I think that's what's behind the drop you're seeing against the rotation zone there now. Jim, you agree?
Yes, I agree. But are you suggesting that the narrative may just have to fit into political ambitions? And the answer to that is, of course it did. When you were showing those defense stocks, all that popped into my head is, we're going to figure out which one has the better government relationship kickback procedure. Speculation. I don't know.
Of course, I'm suggesting that. No, it's obviously different if there were some evidence that Iran was involved, because then Israel might ask for the go-ahead, and they would probably get it. Even if they got it, they might do it anyway. But there's going to be a lot of pressure on them not to do anything, given that money trumps all. And if Iran, no pun intended, and if Iran actually is involved, the oil situation is much more precarious than it's been in the past.
Amen. Yeah.
Go ahead, Mikey.
And also, a lot of times when you have these kind of gaps in the futures markets based off of the geopolitical, if you get sort of a lull, they tend to come back I am not surprised to see crude backfilling. I talked about it on YouTube the last couple of days, a key breakdown level, and it's backfilling now. And we could be getting into more of a significant bottoming formation, but then it would have to rally substantially. And I would need a daily close back above the high of 87.24 before I would shift my view to bullish again. You have it coming into some key support area, but from a longer term perspective, it's still holding the rotation zone. It's still holding. It took a very long time to break out of this key resistance level that is now support. But if you get a weekly close back below about 81.50, would not be bullish, at least in the short term, for crude. That's the key line in the sand that I'm watching. So any backfill into this, I'll be watching for a stronger bottoming pattern in case this support levels now holds. But if we break that, it means we've broken the most recent support that we took out in August from the highs. Highs were roughly around the beginning of August, and we really took it out. And when I look at key support levels, by the way, I look especially for weekly closes. The weekly close is 81.95. I'm giving it a little more room to about 81.50, but you lose that level, we could see a further backfill. So even if now anything could change, we could come back down, hold this little trend line, hold these key low areas, and then something could shift in the Middle East. And if you get that close back above, what was it again, 87.24, the whole narrative shifted. I'm back in full-blown bull mode.
Okay, so here's a question. If it's a stupid question, Liz will edit it out when this goes live. Oh, yeah, it is live. Okay, so here, have you ever thought of like just having some sort of scale of positive 10 to negative 10 and just your general, the general opinion of that chart? Like I look at that chart and to me, it's like a 2 bullish chart if I had that same scale. It's mildly bullish as it is and not tradable until it goes over and sits over that level. And I like that level you said. But do you think of it in terms like that, or is that dumb?
No, this would be again neutral to slightly bullish. If I'm not
right,
even
that's
use
my 2, right?
Yeah. You know, it's nothing that I'd be going out, I gotta buy crude tomorrow. I don't have to do anything. I can let it finish filling the gap. I can see how it reacts at this very strong support level. If that support doesn't hold, then we get back into, okay, neutral to bearish. We start losing about 78.50. I'm in bearish mode.
Right. And I bet I'm trying to dig into your head right now. And why it's sometimes not productive to judge it the way I suggest is because it's not tradable right now. So why even start to push yourself into that camp mentally and psychologically? Because it's a psychological game. Is that a good way to describe it?
Yeah, and I also look at it as no position is a position. It just doesn't mean there's nothing that I need to act on right now. I need the market to give me more information, which it hasn't done yet. And people are always worried about, I want to buy the exact low. Well, I don't mind buying it if it comes down, forms a strong pattern, and then reverses. I don't mind buying it higher because the probabilities have then shifted again once you get the key close. Because they could come down, bounce a little, and just sit in this key support area for a while, waiting for something else to happen.
And a lot of people who never did what we did for a living years ago, where we were actually on the floor trading, don't realize that when you look at it from a perspective of guys like us, there's 3 possible outcomes to a trade: a win, a loss, and a scratch, or a break even. And 2 of those are good. And when you're not in a trade, you're a scratch, and there's nothing wrong with that. Yep. Like it's harder to get back lost money than it is to compound gains. So when you're flat, you still have your gains from the previous winners to compound. It's not the worst thing in the world.
No, and there's, a lot of times people think they always have to be in something. You don't always have to be in something. I like to keep the powder dry for when there is the really strong setup.
And but people also remember that, we in The Princess Bride, we are men of action. That's what they say. But and that's the psychology of it. Trading is mostly boring as it's gravitated from the trading floor to a screen. And oftentimes you just got to fight yourself because we are all people who like to do shit. We don't like to just observe, but you have to fight that. And it's,
when we do
technology.
stuff for some of the bigger institutions, they always want us to stay away from this idea of betting and this and that. And I always try to tell people that trading is an actual, it's a form of intelligent gambling. In other words, you can gamble in a way where the odds are in your favor if you're smart, right? If you actually work at it, you can put the odds slightly in your favor and you could sort of become the house. I like playing craps, right? When I go to Las Vegas or one of those, I play craps. And one of the things that's really dumb to do when you're playing craps is the hards, right? The hard 4, the hard 8, the hard 2, the hard 6. But when you're up, you might throw a chip on the hard 6 if the point is the 6, if anybody understands what that means. And that's when, like, because we do get kind of like juicy, we call it the juice, right?
Yeah.
Don't do a regular trade when you're just excited to do something. Do something tiny, like really, really tiny for fun.
Yeah, that's what I love about the micros.
I should have done a full trade.
Right.
No,
the
that'll
CME
blow you up.
micros are so fun in that it just can eat up dead time sometimes, and by not risking very much until you actually see a pattern, which I think
if you're
is
not somebody that can do those tiny trades, then don't do anything.
Don't do anything. Yeah. Are we going to do gold?
Yeah.
Good.
Want to do that now, Mike?
Can I just for the people who are looking at stocks, I just wanted to compare two really fast in the crude space.
Sure, you go.
The difference between Exxon. So Exxon's pulled back. Now Exxon, it does have a potential double bottom formation, although it's also closed below some key short-term levels. So we could continue to see pullbacks. The only way I get bullish in the short term on Exxon is if it gets a daily close back above 112.07. Other than that, I'm watching for bigger pullbacks, especially if crude keeps pulling back. Versus VLO, Valero Energy. Now, it's pulled back, but it's holding a very key support base. So if I had to look for stocks, I'd be looking for, at least in the short term, if VLO can start bouncing and get probably close above about 130, 132, then I'd be watching for the more of a bounce play in VLO versus XOM. XOM has a lot more heavy lifting to do. The other thing with VLO is if it closes back below about 125.75, don't want to touch it either. So I have a much tighter stop level on this. Now, keep in mind, this crude has to form a lot stronger bottoming position before I will be on Jimmy's scale, like at least a 5 or a 6 on either of these stocks before I'm getting into the more significantly bullish camp.
Right.
Mike, excellent. I got a curveball for you.
What's that?
One of the viewers wants to know if you'll take a look at Live Nation real quick, which is LYV. And I think you're going to like it when you see it because there's a lot to talk about.
A curveball, where? LYV?
You can hit a curveball. I've seen you hit it.
LYV,
sorry.
What did I type? LYV?
Yeah.
Look, the curveball, I can't even get the stock symbol right.
Ooh, that's another sexy chart.
Yeah, that's a fun chart.
I just got to look at a couple. See, I have my whole systematic approach to.
You can't just say it's a sexy chart. It's an 8. Grab it. I'm just kidding. Yeah.
This is for you, Mai. The least you could do is like put a real name on there, but whatever. We got you. We got you covered here.
All right. Let me just see. Oh, look at fascinating. All right.
I knew he'd like it.
Well, what do we have here? So we held. Remember, I started earlier talking about reversal areas between the 50 and the 62.5.
Yeah.
We came down. We spiked down actually in July below there, pounced back up temporarily, but then formed. This would be what I talk about, a longer term bottoming formation against the 62.5, which held, never got a close below it, with the curving up 200 simple moving average. And we've triggered a double bottom, which I just put up the targets for that. And I have not looked at this chart beforehand. Coming up to the first target area, which is a stop raise area for me, right around this 88 area. So I had a cluster.
So if you're in it, you're tightening your stop. If you're already long
this is a tighten a stop area for in it. Now, I will also give out what would invalidate the pattern. A close back below 82.19 would take the remaining pattern off the table. But until that happens, not only if you just look at pure support and resistance, look. So you had support back in August of 23, support in again August, breaking, becoming resistance at the end of August, becoming resistance in September, forming this double bottom pattern. And you can see multi-test, 3 days of testing, chipping away, getting a close above that level, taking off, going to the first target, and holding above that. So as long as this does not get that close back below that level I listed earlier of 82.19, the pattern's still intact. Next minor target, 89.65, 90.11. And then I'm going to look at one other thing in case this keeps running. And I don't have any fundamental comments on this stock. I have actually not looked at this stock before. But your major reversal zone, if it finishes off the double pattern, is anywhere up to 93.07. So that's where, unless this continues and can follow through with a close above 93.07, I'd be potentially watching for at least a stall out pattern in here and some backfill.
I love that chart. I just sent myself a text with those two names. I will probably look to do it in some sort of call structure, which, by the way, that brings up my question. Like if you look at that chart and we both agree, like to me, it's a 5 bullish, and I want to put on options to represent something higher. What duration would you give, Mike? That's a daily you're looking at right there, right?
That's a daily.
So you think like a 2-week, 3-week option will give enough time to fill out the pattern as you see it? I know that's not.
If I was doing a 2 or 3 week option play, the key level I'd be using is the key strike I'd be using is around 90.
Got it. Okay, I appreciate that very much. Again, I'll remind people, I'm not recommending. I was asking for recommendations for an expert. I'm not recommending shit. Okay.
We're running out of time, Mike. So what's like the last one or two you really want to look? Let's do gold because Jimmy wanted to see it.
Gold.
Yeah.
Oh, I'm looking for a long-term multi-month bottom in gold. We have run up here, but we do not have a long-term multi-month bottoming pattern just yet. I'm going to be looking for some backfill in gold and then a possibly much stronger bottoming formation that could be setting a key low for, again, many weeks to many months.
Okay. So nothing yet. That's a 0 for you. You need to see some further information.
I need to see some backfill. Again, V-shaped bottoms in gold. Like, all right, let me give you another example here. Look back in September, October, November of 22. You see we got the initial run up right here. Backfill. And then we found it was actually a triple bottom that couldn't break, and then it finally took off. When you had the little bottoming formation in February and March, it formed a beautiful double bottom and then took off. This, so far we've had the launch pattern, but now I'm watching for the backfill to see what kind of formation we get. You very rarely get the just a V-shaped bottom in gold that's sustainable.
Got it. All right. Unfortunately, I could do this for 2 hours, but we got to go, right?
We are just about out of time. Mike, tell everyone where they can find you, if they need to find you, if they want to find you.
Just go to YouTube, search for Path Trading Partners, and come join us. There's a live stream every day, every morning. You can even watch it on demand later. You can start to learn some stuff we do. There's nothing to buy, nothing. It's general, just helping people out with charts and the overall analysis of the markets and trying to show people maybe a different way that's not using a ton. There's a lot of garbage out there, and we don't promote the garbage.
Mike also will play the piano back there every once in a while.
Oh,
It's a lie. That's a lie. That's not really a piano. It's a picture of a piano.
It's all a fraud.
Here.
It's all a
It's
fraud.
all a fraud. If you question the piano, then we can then question everything else he said. No, thank you, Mike. This has been again. When you come on, you make me look at things differently, and you've made me money in the past. I really, really appreciate that very much. Thank you.
I'm still looking for that check in the mail.
I gotta go.
Cheers, everybody.
All right.
Thanks, Mike.
See you. Cheers. Thanks.
Yeah.